Welcome to our comprehensive technical analysis of U.S. equities in the current bull market. In this video, we'll break down a curated selection of stocks, focusing on their momentum, trend strength, and performance metrics. Our goal is to move beyond broad market trends and dive into the specifics of individual securities, helping investors identify both opportunities and risks. By leveraging a consistent, data-driven framework, we'll compare each stock side by side, ensuring a clear understanding of where the strongest momentum lies and where caution is warranted. Let's begin by outlining the analytical tools that drive our insights. To ensure our analysis is both rigorous and comparable, we apply a standardized set of technical indicators to each stock. This approach allows us to evaluate momentum, trend, and performance across the entire group with consistency. In this section, we'll introduce the key indicators used throughout the report, setting the stage for deeper insights in the following scenes. Understanding these tools is crucial for interpreting the data and drawing actionable conclusions from the technical signals we uncover. Relative Strength Index, or RSI, is a momentum oscillator that measures the speed and change of price movements on a scale from 0 to 100. RSI is a critical tool for identifying the strength of a current trend and spotting potential reversals. Generally, values above 70 indicate an overbought condition, suggesting a possible price correction, while values below 30 point to an oversold state, hinting at a potential rebound. Throughout our analysis, RSI serves as a key signal for both opportunity and risk. Moving Average Convergence Divergence, or MACD, is a versatile trend-following momentum indicator. The MACD signal is a moving average of the MACD line itself, and it's used to generate buy or sell signals. By analyzing the relationship between the MACD line and its signal line, we can identify changes in the strength, direction, momentum, and duration of a stock's price trend. This makes MACD a powerful tool for timing entries and exits in the market. Trend strength goes beyond simple direction, offering a quantitative assessment of how powerful and sustainable a price movement is. In our analysis, trends are classified as very strong, strong, or medium, based on the conviction behind the price action. This metric helps investors distinguish between fleeting rallies and durable trends, providing a clearer picture of which stocks are likely to maintain their momentum. Performance metrics are essential for confirming whether technical signals are translating into real market gains. We examine returns over multiple timeframes: weekly, 1 month, 3 months, and year-to-date. This multi-layered approach allows us to spot both short-term momentum and longer-term trends, ensuring that our analysis captures the full picture of each stock's performance. Pivot points are calculated price levels that help identify potential support and resistance zones. The pivot position, such as R1, R2, or R3, indicates where the current price is trading relative to these key levels. When a stock approaches or surpasses these resistance points, it often signals a potential ceiling for further price advances, making this metric crucial for anticipating reversals or breakouts. With our methodology established, we now present the core data for each stock. This consolidated table brings together all key technical and performance metrics, enabling efficient side-by-side comparison. By viewing the data in a unified format, investors can quickly identify leaders, laggards, and outliers within the selected group, setting the stage for deeper analysis of market momentum and risk. A significant portion of the analyzed stocks exhibits strong positive momentum, as measured by the RSI. Notably, several have crossed the 70 threshold, placing them in overbought territory. For example, Cardinal Health, CAH, shows an extreme RSI of 86.08, signaling intense buying pressure. Exact Sciences, EXAS, Avidity Biosciences, RNA, Insight, INCY, and DuPont, DD, also display very high RSI readings, often coinciding with key resistance levels. This combination is a powerful signal, but it also raises the risk of a near-term price correction. When an overbought RSI reading converges with a significant pivot point resistance, the signal becomes even more pronounced. Stocks like EXAS, INCY, and DD not only show high RSI values, but are also trading at or near R2 or R3 resistance levels. This confluence confirms strong buyer control, but also materially increases the vulnerability to a short-term price pullback or consolidation, making it a critical watchpoint for investors. Trend category metric highlights stocks with the most durable price movements. 4 stocks, Warner Bros. Discovery, WBD, Fabrinet, FN, Sanmina, SANM, and Avidity Biosciences, RNA, lead the group with a very strong trend classification. This indicates powerful and sustained directional momentum, a key positive for trend-following investors seeking robust opportunities in the current market. Beyond the top leaders, a broader group of stocks demonstrates strong trends. Names like Apple, AAPL, Cardinal Health, CAH, and Insight, INCY, showcase robust upward price movement, even if not at the elite level of the very strong category. This widespread strength reinforces the overall bullish sentiment in the market and suggests that positive momentum is not limited to just a few outliers. Year-to-date performance analysis reveals several standout leaders. Avidity Biosciences, RNA, tops the list with a 135.83% YTD return, followed by Sanmina, SANM, at 115.49%, and Warner Bros. Discovery, WBD, at 112.01%. Fabrinet, FN, also posts an impressive 109.59% YTD gain. These triple-digit returns highlight the powerful upward trajectory of select stocks, driven by sustained buying pressure and strong technical signals. Short-term performance can also reveal emerging opportunities. For example, Cardinal Health, CAH, posted a remarkable 19.47% weekly gain, reinforcing its extreme momentum as captured by its high RSI. Monitoring these short-term surges is essential for investors looking to capitalize on rapid shifts in market sentiment and price action. Not all stocks are participating equally in the rally. Some, like Morgan Stanley, MS, and Well, have posted recent negative performance, signaling short-term struggles despite the broader bullish environment. Others, such as Apple AAPL, Gilead Sciences Guild, and MS, fall into the normal sell signal, RSI category. While not overtly bearish, this suggests their upward momentum has paused or may be starting to shift, warranting closer observation for any further signs of weakness. Despite the overall bullish sentiment, emerging signs of divergence are appearing. While many stocks are surging, a few are lagging or showing signs of moderating momentum. This divergence underscores the importance of individual stock selection and highlights that even in a strong market, underlying weaknesses can exist. Investors should remain vigilant and not assume that all stocks will move in tandem with the broader trend. First key takeaway from our analysis is the dominance of bullish momentum across the majority of analyzed stocks. High RSI values, strong or very strong trend ratings, and spectacular year-to-date returns all point to a market environment characterized by powerful upward movement. Stocks like RNA, SANM, and WBD exemplify this trend, delivering exceptional gains propelled by sustained buying pressure. Second key takeaway is the elevated risk of overbought conditions. Intense positive momentum has pushed several stocks into significantly overbought territory, especially where high RSI readings converge with key pivot point resistance levels. For stocks like DD, INCY, and EXAS, this confluence signals potential exhaustion and increases the risk of short-term volatility or a price pullback. Investors should be mindful of these warning signs when making decisions. Third key takeaway is the emergence of divergence within the market. Not all stocks are benefiting equally from the bullish environment. Some, like MS and Well, have posted negative returns, while others are showing signs of moderating momentum. This highlights the importance of careful stock selection and suggests that investors should not become complacent, even in a strong market. This data-driven analysis provides a clear, quantitative snapshot of the current technical landscape for U.S. equities. By focusing on momentum, trend strength, and performance, investors can better navigate the opportunities and risks inherent in the market. The findings underscore the value of a disciplined, indicator-based approach to stock selection, especially in a dynamic bull market environment. Summary: our technical analysis of U.S. equities reveals a market driven by strong momentum, but not without its risks. By applying a consistent set of indicators, we've highlighted both the opportunities and the caution points investors should consider. The key is to remain data-driven, vigilant, and selective, ensuring that investment decisions are grounded in robust technical evidence. Thank you for joining us on this deep dive into the current bull market landscape.